the cloud. Okay, good afternoon, everybody. Welcome to today's live Lunch and Learn here on Bismarang in the Bismarang Northern Ireland Circle. Our topic today is Ask Me Anything, and our theme for the month on Bismarang is business and finance and business and just that kind of thing generally, really because it's the work up to the end of the financial year. So although there's a few of us on screen today, the primary people that are going to be talking are our three guests today, which are Mr. Martin Malseed, Martin Gilchrist, and Janet Jensen. The other co-host in here is Sandra Parry. So if I disappear or something technical goes wrong, you can speak to Sandra. She'll sort you out. Before we go any further, I mean, Martin and Janet, do you want to just give us a 30-second just about yourselves, if you could? So Martin Malseed, do you want to kick off?
Yeah, Martin Malseed, started working in accountancy in 1974, played rugby, eventually realized I qualified in 1983, worked for a bank for a couple of years, got the lump sum from that last week. I should have stayed with the bank. I then had a practice, sold it, which is an interesting experience. Then I went into other aspects of tax, and I'm now back with accountancy about 7 years later. So that's me, Martin Malseed.
Okay, Mr. Gilchrist.
I was reading Martin Malseed's profile, and it was saying that he started in accountancy in 1974. I was born in 1974, so well done, Martin, for surviving in accountancy for that length of time. That's quite an achievement. My name is Martin Gilchrist. I'm here from Gilchrist & Co. Chartered Accountants, and if you have anything to do with Bismarang at all, if you're watching this, you probably know who I am and what I do already.
And Janet.
Afternoon, everybody. My name's Janet Jensen, and I'm a chartered management accountant by profession, and I also have a business called Extra Accounting Solutions. So I'm not going to tell you what year I was born in, but I qualified with the Chartered Institute of Management Accounts in 1993, became an associate member in 1998, and I started my own business in October 2019.
Good. Excellent. So we'll not mention that it took Martin Malseed 8 years to qualify again, but I just thought but I'm sure he's made up with it with lots of accounting experience then. So right, so any of the audience who are watching in, please do feel free to use the chat box and put any questions that you'd like to put to our venerable team. My name is Guy Bucknell. I have done my specialist is marketing strategy, but I have worked for major brands, small brands. I've started businesses, sold businesses from scratch, etc. And I'm a co-founder of Bismarang. So when it comes to the general admin of a business, particularly a young business, I might have a few ideas as well to throw in there. Whether the accountants agree with me, that's another question altogether. But I'll try and keep my mouth shut. So, but to kick us all off, I'm going to ask the three of you to justify your existence with a question which we covered earlier on in the month with one of the Bismarang topics, networking topics, and the question is: apart from keeping us all out of prison, what is the point of having an accountant? So I'm going to ask Mr. Gilchrist to kick us off with that one, please.
I think it depends on the type of business you have and the type of business you are. But for the people that we work with, for the small businesses and solopreneurs and professionals in independent practice, we're their right-hand man. We're fighting their battles with HMRC. We're giving them the information that they need to make the right decisions. And we're watching out for the things that they don't know. An accountant should be...
Sorry, just on that, what sort of things don't they know that they don't know?
You know what, Guy, you go into a list as long as my arm, but quite simply, some of the things might be you're registering for VAT, for example.
Yeah.
At the moment, HMRC are saying that it's a 65-day registration. So you ring up and say, I want to register for VAT, or you send your application, they'll tell you it's 65 days. But that 65 days depends. And there's a number of circumstances and things you can do that can maybe shorten it. And obviously, you don't want to be waiting a full 65 days because that's 65 days where you're either issuing pro forma invoices, or if you have a shop selling coffee or whatever it may be, where you're not charging the VAT, but you're going to be liable to pay it over. So that'd be one example of literally thousands of things that we could go through, but they're all context specific. Every person you're talking to, the context of their business is different, their situation is different. So the stuff that they don't know they don't know is going to be different. But finally, the point I would make is the accountant is one of the very few people in your business life where your agenda is their agenda. It's the accountant should be the person who is on your side when most other people aren't. Now, I don't want to sound cynical or critical about that, but your clients have a different agenda from you. They're trying to make their own business work. Your suppliers, you know, they are trying to maximize their income. HMRC is not on your side. Their job is to get blood out of a stone, particularly now. The accountant should be, if there's a good relationship, and that's what our practice is all about, building long-term, steady, solid relationships with people that know and trust us, and that we know and trust them. And when you have that relationship, you know, we've got your back. Okay. That's what an accountant's all about.
So, Martin, what about you? Would you have anything to add to that as a fellow chartered accountant?
Yeah, I feel for people who say they don't have an accountant. And it's like you're thinking, what are they doing? Like an example, I have these Italian guys as clients who make pizzas. So that's their job. Brilliant. They're from Napoli, and they argue about who's the best between the two. Three of them different businesses. And one of them did his tax return first year. He bought a truck for about 14 grand, and he never claimed the big allowance on it, which you get initially. So consequently, when he got to me, we were able to fix it, and he got a tax refund of about 2.5K or something like that there. And after my fee, he got 500. So I look after these guys really well. So he was happy.
500 quid he didn't have before, eh?
Yeah.
Everyone's a winner.
So I roll.
Okay, and so Janet, you actually come at this from a slightly different angle, being the management accountant with businesses. Would you agree with the above, or am I getting confused there?
Well, I would echo probably what both Martins have said, but I suppose as a chartered management accountant, my focus is really around what the numbers are telling you. Your numbers will tell you a story, and generally speaking, if there's a problem or a challenge, the answer is already there in front of you. It's just that a lot of business owners fail to have that insight or have that information to give them that insight. And so a chartered management accountant is more focusing on what is the business actually telling you? Is it good news? Is it bad news? And if it's bad news, what can you do about it? So it's more about focusing forward and thinking of where your business, what direction your business is going. So, you know, to answer your question, I suppose, you know, it takes a reasonable degree of years to become an accountant, both from a practical point of view and the theoretical point of view. And chartered management accountants have to have a certain level of practical experience of working in businesses, so they know exactly what it's like to be at the top end of it. So, you know, nobody goes into business to do numbers other than accountants. So really, your accountant is your best friend. And there's a good stat that our professional body quotes that 52% of business owners will reach out to an accountant as the first person they think of to get advice and support. So from my perspective, it's about hand-holding people through either a problem they're trying to solve, or to help them understand what their business is telling them, and to help them grow and expand and move forward.
I must admit, I concur with you, Janet. You and I have had sort of similar conversations. Is one of the reasons why you are actually the accountant for Bismarck at the moment, or making sure that we get our management accounts in order going forward. What I find quite difficult to explain sometimes is that when I'm mentoring startups and early stage businesses, that in fact actually your business is reflected in your accounts. And if you want to know what's going on within the business, then it's usually, if the accounts are well maintained, it's all there. Also, when we came to lockdown last year, I don't know if you guys found this amongst your clients, that one of the things that we were trying to say is go back to when big things change, go back to your accounts and see what's going on in your accounts, because it will tell you which bits are working, which bits aren't. And if you want to make decisions going forward, then a good clean set of accounts, management accounts, up to date is very, very helpful.
Absolutely.
There's another question that kind of popped into my head there is, how often do you find yourselves at the end of the year and I know this isn't, we haven't talked about this before, trying to educate your clients on the numbers and how the accounts work. Would that be a typical issue that you guys have? Martin G?
No, because we would hope that our conversations are continuing throughout the year. I appreciate that there'll be some clients that would maybe only come to us for self-assessment tax return, but all our clients, one of the things we do is that telephone support and consultations on whatever format that clients want to contact us are always free. So the client, if they have an issue, knows that they can call us and they don't have to worry about the clock ticking away in the background. And that genuinely, unless we're answering a substantive professional query, which obviously has to be covered by professional indemnity. But if it's just a casual conversation or a general conversation around a subject, we will take as much time as the client wants. And our practice is set up in such a way, Michelle and I work in such a way that we make sure that there's time for those conversations throughout the year when we're not just doing self-assessment tax returns and stuff. So the hope would be then when you get to the stage of the tax year end, so we're going to be starting to chase people for their self-assessment tax returns from the 6th of April. Those emails are starting to go out then. So hopefully by the time they're doing the tax returns around about May, June, July time, all those issues are and if there are any questions come up, they're going to be quite minor.
Martin Malseed?
I find a lot of them are focused on the money. If they have money in the bank and their tax bill is whatever they expect, and they pay their VAT on time, pay their pay-as-you-earn on time as they've got it. There's some of them not that fussed. Like I have a guy, his year end is June 20. Luckily to be filed end of June 21, limited company. Million turnover, at least 2 million, 3 million probably. Payroll pretty big. They don't give a monkeys. I'm picking up his books. He's got it all in zero, so it's not going to take me that long, but he doesn't know that. It's all pretty neat and tidy, but he's not that fussed. So I'll give him a number on Monday, or whatever, end of March to pay his tax. Will be thereabouts, and he's not sweating about it. Like he's not fussed. So very few I find are really fussing into the detail. So balance sheets and drawings. And
so what about the basic question of the difference between a P&L and a balance sheet? With Martin Malseed, the guy you were just talking about, would he know the difference and would he care?
He doesn't care. Like he's making dough. He's making dough. They obviously do costings internally on jobs. They do big jobs, big clunky jobs. So everything is going fine there. The problem is going to be he's going to meet the bank. Don't care about it. Someday the bank are going to call him in and say, "How's it going? How much did you do last month, or what did you do last quarter?" And then the shit's going to hit the fan. Start where he's happy at the moment. It's like years ago. Say we went to holidays in Portrush and we're very happy going to Portrush, and then somebody suddenly mentioned places in the sun, and people got the sun and realised Portrush wasn't that good, and that's why people move around from accountants, because it's the same way we used to go out for a meal, fish and chips. And
can I just say, for all those people who are watching from Portrush, we quite like it. We do quite. I love
Portrush. I love Portrush. I'll be up there now.
Janet, what about you? I mean, because I know you do quite a lot with in your latest venture with Extras, that you are working with some quite small businesses. Do you find yourself educating people the difference on P&L and balance sheets? And
yeah, I do. I guess one of the challenges I have is getting people to understand there is two different types of accountants here. There is the compliance aspect to it, which is mostly what the two Martins are talking about. But then there's the other aspect around forward planning, forecasting, and wanting to take your business up to the next level. So I guess it boils down to really what a business owner wants out of it. If he just wants to have money in the bank, then I guess the type of experiences that Martins are talking about is fine. But if you want to take your business up to the next level, then you do have to have an understanding of what a P&L is telling you. You do have to have a budget. You do need to understand your balance sheet. A lot of my clients, I would find, don't really think about that, and so I spend a good chunk of my time trying to explain to them the benefits of forward thinking and how that can mean that you can seize opportunities for your competitors or avoid challenges that perhaps you didn't see coming down the line.
Yeah.
We'll see coming down the line.
I have two things on this. The first one is April 2010. So I had sold Jim TV, Screen Media in early 2009, and from 2000, so mid 2009 to 2010, I was set up a consultancy business and was doing really well, working with SMEs, larger in Northern Ireland terms, slightly larger SMEs on marketing strategy, etc. And I was putting in a full near London rate, day rate, and doing very well until about the 6th of April, 2010, when actually 5 out of my 6 clients just pulled the plug straight away. And part of it was because they had just got their accounts, and their accountants had turned around and said, you've made a loss last year, because they were recovering from 2008, 2009. And suddenly they said, you have to stop spending money. And what I found really interesting was that they hadn't realized until that point, until their year end, actually that they were losing money, which I found really strange. And I can't remember what the other really interesting. Oh yes, the other interesting point was that marketing strategy. It seems like, you know, accountancy one side and marketing on the others are not interrelated at all. When you're talking about a marketing strategy, you're talking about the long term and how you're going to grow this business over time. And actually, particularly with SMEs, the state of the accounts is extremely important. A, because you need to understand, the client needs to understand how much cash they're likely to have in 4, 5, 6 months' time to allow you to implement campaigns. Before they can ask people like me to put campaigns together, they have to give us a budget, and they have to know how much they're going to get. The second thing is they have to know what their cost per acquisition for a client has to be, and that comes from the accounts. And so it's very difficult for people like me on a large scale to do proper strategies without a clean set of accounts. Anyway, there we go. So I think we've covered that one. So what else have we got? So Sandra, is there anything in the chat box? No, not yet. No, we don't see anything going on in the chat box there. Okay, so I have another question here. Right, so accounting packages, gentlemen and lady. I'm going to start with Janet. What accounting package do you recommend, or what accounting packages are out there? What do you recommend and why?
Okay, well, there's plenty out there to choose from, and I guess a lot of it, again, depends on where you are in the business journey. It's quite okay not to use an accounting package. You can definitely use it on Excel as long as you're comfortable with Excel and you're able to use the functionality of it. But if I was to recommend a package, bearing in mind that I'm a Xero partner, but putting that aside, I would definitely say it has to be cloud-based. That is where the future lies, particularly when you think about HMRC making tax digital and going the digital route. The benefits also of having cloud accounting packages, you don't have to have it on your desktop, you don't have to back it up, you don't have to do the updates and all of that. That's all done for you because it is, in the cloud. So there's many to choose from. I think the leading two would be QuickBooks and Xero. QuickBooks probably for a small business owner, but Xero more for the applications that it can hold. It has a lot of extras that you can buy and bolt on as and when you need them. So it starts, with the core package, but then there's something like somewhere between 800 to 1,000 applications to do different things that sits around your Xero. So for example, CRMs or workflow management systems or automation of receipts and stuff like that. They're all applications you can bolt on. So I would say it just really depends on where you're at. I mean, there's no point in spending lots of money on a fancy accounting system or software if you're just a sole trader and maybe, FreshBooks or QuickBooks Online is completely adequate for you. On the other hand, if you've lots of users and you've got a team and you're dealing with a lot of different aspects, then maybe Xero is probably more practical because of the features of the applications.
Do both Martins, do you guys profess the use of Xero as well, Martin Malseed? I heard you mention it earlier on.
Yeah, I would say I've lots of guys in Xero and I love it. I had a couple of guys, pubs in England that I worked for. They were QuickBooks, they were happy enough with them. There's Free Agent is one pretty huge company which operates on the radar. If you're an Ulster Bank customer, you get it for free. Like obviously Xero has got all these, I call it for hipsters. It's got all these trendy things they can add on, and I see the big advantage in that. And say, but I was saying, I this morning I called to see a client to leave his books back. He's the only guy in the world to have to leave his books back to, but he's sitting in about 200,000 or 300,000 in the bank. He's no business plan worth a jot. He turns over about 1.5 million a year in off licenses. He owns 6 properties. Like he doesn't talk about, he doesn't know what, if I mentioned the word drawings to him, he just said, when I say here's the tax, he says, oh, that's a bit steep. And then we have a conversation about, risks. I like to talk about guys' risks that they have down the road. They say he's a big red book guy, and we need to get him switched quickly.
So as well as QuickBooks, there's also Big Red Book as well. So Martin Gilchrist, you guys are Xero partners as well, aren't you?
Yeah, all accountants are now. I think if you had gone back 10 years, can you remember 10 years ago? I think 10 years ago I was about 2 stone lighter. I remember that. I wasn't any better looking. I think I've got better looking with age. But 10 years ago, if you'd asked any accountant what solutions did they use, they probably would have said Sage. And the reason they would have said Sage was that was the one that everybody knew. The bookkeepers knew it, the clients knew it, the accountants knew it, their staff knew it. And why it was like the old IBM thing. Like if you're going to recommend anything, recommend something that's not going to give you any hassle. And apart from all the bells and whistles that Xero has at the moment, what you really need is consistency and security, in that you know that when you go to turn that system on and you go to use it, or your staff go to use it, or your clients go to use it, that the data is going to be there, that it's not going to have been corrupted, that the bank feed's going to work, and all these things. You don't want to have to go on every 2 weeks and repost a bank feed that's gone wrong, or try to find out why your VAT return hasn't been submitted, or find out some sort of corruption that means that all your motor expenses have disappeared. Now, I'm not saying that Xero is completely perfect and those things won't happen, but it has more resource because it's one of the largest cloud-based companies now, and that's really one of the things you want to look at. Where's everybody using? It's got more resource and all the rest, so that when stuff does go wrong, it's got the resource to fix it. So that would, apart from the bells and whistles and all the nice things, because let's be clear, all the accountancy packages will do your VAT return, will help you prepare your self-assessment tax return, will give you the age debtors listing and all the stuff. They'll all do it. But the question is, who can you trust to do it day in, day out, and not let you down? And I would say Xero is more likely than the rest.
Okay, so what as a business owner, what I like about using any online system, but particularly Xero, is, for me, it's the bank rec. As an owner, so I know for you guys about preparing books and making sure that your clients are kept out of prison, as we were talking about earlier on, and the returns are done on the right time and all that sort of stuff. But for me, what I really like about Xero is I can go in once a week and just go. It makes suggestions of, this payment came into the account, and is this for this, and is this for this, and is this for this? You go, yes, no, that's that. Dead easy. Whereas back in the day, as Martin Malsey, just before we came on here, was talking about how he's had his head shoved in somebody's receipts for the last week, trying to match them to doing bank recs and all that sort of stuff. And so as a business owner, going back to that point right at the start of being on top of your accounts and being on top of your books, if you can simplify those simple things like that and make doing a bank rec once a week really easy, then fantastic. I'm sold. And for, what is it, £16 a month or something for the basic package for Xero? Is that right? Something like that?
£12 for the starter package a month.
Right. Okay. Well, when you charge my hourly rate, that's nothing.
The big challenge for a lot of people is, and I used to go to clients' offices and there'd be boxes of Sage unopened, and your danger is people see QuickBooks, for example, they think it's a way to do their tax return and they buy it, but it's not going to deliver the proper tax return. Like, there's accounts and then there's a tax return, and there's all this sort of magic happens in between. And unfortunately, people think having that software is going to be the answer to it all. Press a button, they'll get the numbers. They need to actually do the numbers and get guidance on how to work the numbers.
Oh yeah, I mean,
there's an analogy there, Martin, if I can just add to that as
Yeah.
well, that confusion between doing the numbers, being able to put stuff onto your account software and what actually happens when the tax return stuff. If you imagine a car, just because you're able to drive a car, that means you're able to use the software. It doesn't mean that when something goes wrong or the car needs a service or it needs an engine overhaul or whatever the case may be, just because you can drive the car doesn't mean to say you can do all those things. The accountant knows, for use of the analogy, the car inside out, all the bits and pieces, where they fit together, where you get the spare parts, all that type of stuff. That's what we do.
Yeah.
And you drive the car when you're putting the information onto the system.
Yeah, absolutely. And
That's a good explanation.
Sorry, Janet, sorry I interrupted. What did you say?
I love analogies, and that's an excellent explanation of it. I couldn't have put it better myself.
No, absolutely. In the same way as you'd ask your car mechanic for a recommendation of what oil to use or whatever, etc., or you would take them to service your car. Exactly, that's for me is the essence of what an accountant will do for you. And it is a horrible thing to say in front of you people, but yes, accountants have saved me so much money in the past where I have tried to do my self-assessment of tax return, and and then gone and HMRC then gives you the number at the end, says this is how much you owe, and you go, what? Which way you run up and see your accountant and go, no, and he goes, yeah, no, you won't moan about my fee this time, will you?
So worth their weight in gold. I mean, I have done bookkeeping before, and I was doing my own. Now, obviously, I'm just a wee micro business, and I was happy enough doing it while I had very few clients and all the rest of it. But now that I'm more established and bringing in a reasonable income, I just don't need the headache. I really don't. And this is my first outsource, so I have now engaged an accountant. And she's in this room. And already my head just feels clear because I don't have to think about that.
I think actually that a very good point. It's kind of sort of similar to outsourcing to a VA, Sandra. That in fact actually it allows you to concentrate on your core business and get on and doing what you set the business up originally to do. A business is a business, and the numbers are extraordinarily important. In fact, some might argue they're the most important thing, but actually what you're good at is the other stuff. So give it to the accountant.
Absolutely. Totally agree.
Okay, with that, talking about the numbers. Go on, Sandra. Sorry.
Here.
Sorry?
There's 2 questions in the chat box.
Oh, go ahead, yeah.
So one is, do any of the speakers have any insight into some vital signs they see when auditing accounts that show a strong business?
Oh, Mr. Malseed, why don't you have a go at that one first?
I said I don't do audit, but I've loads of experience about it, and the strong signs we're looking for of a business, strong, cash reserves, loads of cash reserves, very little debt. Obviously, it depends on the business. Say it's an hotel, they'll generally have loads of debt and very little cash reserves. But cash reserves are so important. When you see debtors that are old, you might think it's great having debtors, but it's cash is the thing that you keep looking for. And obviously, when you're looking at accounts to see what the owner's taking out of it, if they're sucking it dry, if it's a limited company and they're just taking money out like a hole in the wall. Like I've seen limited company directors buying shoes, these are doctors I look after, buying shoes and summers. They don't understand. And they're buying all this stuff through their limited company, and they don't understand that's not the way to do it. So that's sort of things to look out for. Obviously, not paying their bills is a weaker thing, but strong point is cash, and obviously fixed assets that are modern. Cars, plant, equipment. Otherwise, they're obsolete, and very little stock. Nowadays, it's just in time stock. With loads of stock, obviously, you have to turn it into cash. Everything needs to be turned into cash. And obviously, it depends on the trade, the construction. Like I don't know how clothes shops are even thinking about business these days. Stock. So sorry, a bit waffly there, but cash definitely.
Mr. Gilchrist.
I had written down cash. I had written down cash, cash, and cash, but Martin has already answered my question. I think on top of that, and remember again that my bias, my viewpoint is entirely from individuals and small businesses. And when we're trying to help our clients make their businesses better, or to make sure that the businesses are steady and secure and are saying all the right things for when they need to get business financing or mortgages, or they need to take money out themselves, the fundamental question we ask is, are they in control? Mm-hmm. Are they, is this, to use a car analogy, has it got a loose wheel? Are the brakes working? Do they know when to brake? Do they know when to speed up? And what does that mean in relation to what the accounts are saying? When you're looking at the accounts, you get to see things like how well managed are the accounts? So what is the overdraft facility sitting at, as Martin said, but also where are the expenses? You know, is anybody monitoring the expenses? Is there comparison analysis going on in any sort of way? Like, are they setting budgets? Do they have a budget? Are they sticking to the budgets? How well are the assets being utilized? So what is the cost of the employees, and how much money are those employees generating? Mm-hmm. So there's a whole lot of questions. You could simply take out the profit and loss account and the balance sheet and work your way through with a client and say this, and this. What's actually happening here? Now, part of the reason why that doesn't happen as much as it should is that it's very hard to align the accountant's time with the client's time, because any successful businessman is busy. Their days are filled from morning to night, full of urgent stuff that they're not going to get done. Never mind the urgent stuff that they are going to get done. And for me as an accountant to come along and say, I've got your balance sheet here sitting in front of me, and I want to take out an hour at any time to suit you. Anytime to suit you, I'll sit down with this balance sheet and go through it. It's very hard to find those times that align, but it can be a very useful. It's not rocket science. It's just somebody being an accountability coach almost for how are you doing those things.
Janet, warning signs.
Warning signs. Well, again, I wouldn't be much into auditing, and I think there's warning signs that you don't need to go as far as auditing to see a company that's in trouble. It is knowing your balance sheet, because your balance sheet is a snapshot in time of the health of your business. So it shows you the liquidity, it shows you profitability, it shows you your equity. And, those things are fundamental to be strong if your business is going to survive. So liquidity is all about, have you got enough cash reserves to see you through for the next 6 months? Mm-hmm. Equity is, how strong, if your business were to close up tomorrow morning, what's left over when you take the liabilities away from whatever assets you've got. So generally your balance sheet will tell you that, and there is a raft of about a dozen ratios that you can do on your balance sheet, which will give you an instant guide as to how strong or how weak your business is, and that's quite easily done. And in fact, I had somebody, I don't know if anybody notices, but I usually put out on a Tuesday an accounting term, called Accounting Term Tuesday, and a couple of weeks back I put one out on a balance sheet, and the description of the balance sheet was, obviously this is a way to show or to estimate or assess your financial strength. And I had somebody reach out to me and ask me to do that for them. And I just used, about a dozen different ratios that you can quickly pull together to show that. So if anybody is interested in doing that, I'd be more than happy to do it for them.
No. Don't you start on down Martin Gilchrist's route of advertising yourself on here. Now just calm down.
Just trying to offer my help here.
No, I must admit.
What did I do wrong? We draw.
Just to be, just sort of coming at it from a business owner side of it as well, and having done startups for 20 years, I have to. As soon as somebody said debtors, I think it was Martin who said it first. I think both Martins agreed, and Janet probably would as well. And talking about the balance sheet, debt within the business, if it scares the living daylights out of me. I've been there before, where in 2008 we had a business that we had an overdraft facility up to £250,000, which was generally running at about 200,000, and the bank called it in, literally rang in and said we want it back in 14 days. And you should have seen the conversations I had with our shareholders. But debt for me within the business, I know it sounds like a really horrible thing, and I know there are people who say there's a lot of cheap money going around at the moment, etc. Yes, there is cheap money. If you're going to have debt, now is probably the time to do it. Not that I'm a financial advisor, but it just scares me when I'd much rather, if possible, do some form of equity deal to raise finance, etc. Because I've seen it not just in my own business, but other people's business as well, that when times get tough, it's the debtors that start calling. Just on that, very quick one, guys. Because there are a couple of other questions coming up in here, but creditors. So we're talking about just, I mentioned debt there. What about creditors? Do we think it's a good idea to give people credit this time these days? Do we need to? Janet?
I think it depends on the circumstances, really. I would say, no, we shouldn't give credit because, at the end of the day, everything has a value. But there are circumstances exceptional circumstances, I think you probably can, as long as you're comfortable that you know that it's not going to cause you an issue further on down the line and it's somebody that you trust. But generally speaking, I wouldn't be promoting the fact that you would give credit. I think everything has a value, and your services as such or your product is of value to someone, and if it's that important to them, then they will find a way to pay for it.
Yeah.
Upfront.
Martin Gilchrist?
In an ideal world, I wouldn't give credit, I wouldn't take credit, but I don't live in an ideal world. I live in a real world with everybody just like me, fighting a good fight, trying their best. And there's some of our services aren't really that much. So if we have a new self-assessment tax return client, that's £300. I'm not saying £300 isn't a lot of money, but in the greater scheme of things, the expenses are probably incurred, it's not £300. But if you add £300 to how much it costs to get the limited company accounts done, and if we're also doing the VAT returns and we're also doing the payroll, and there's also auto enrollment on there, that can add up to a couple of grand's worth of work very, very quickly. And these are services that the client doesn't want to have.
Yeah.
They have to have.
Yeah.
It's an overhead cost.
Yeah.
So in those instances, if the client comes to us and says, look, I can't afford right now £3,000 or £4,000 off the top of my bat, we are going to work with those clients to provide them with a facility to make sure that they can afford the service. Because at the end of the day, we expect our clients to help us. Be on time, pay on time, give us the right information when we need it, listen to our advice, take it where it's appropriate. But at the same time, that has to be reciprocal. It has to, what goes around has to come around. And if our clients need a little bit of help to get them over a hump, or to deal with a big bill that they couldn't otherwise afford, or they may not take the advice or the services because they can't afford it at that point in time, obviously providing a bit of credit in there is going to help. Now, it's not ideal. Obviously, you'd want everybody to pay you up front right away, but it's the real world, and you have to work with, and it depends on your business as well. Martin Malsey's business and Janet's business may be different from mine, but that's the way our business works, and that's why we offer it.
I get that. I don't mean to be pushing you guys. So I'm actually just going to, there's another couple of questions in here. From Trevor Bradfield. Trevor, do you want to just quickly ask the question you put in the chat box there?
Yeah, so how do you value a business? Is it simply taking annual accounts, and if it's in profit, then you take 3 times, 5 times multiple of the profit? Is it as simple as that to value a business?
Martin Malseed.
Yeah, I sold my business, which was an experience. And generally when accountants sell their business, it's based on turnover. It's based on, will the turnover be there? And you get 50% down on day one. And then at the end of year one, you're going to get 50% based on retention, but they're looking at leavers and joiners. And then at the end of year 2, that one was, because the guys, I'm not going to use the word, put it this way, they didn't pay me the final bit because the way they managed the practice. So consequently, those clients are now mine again. But anyway, 7 years later, 8 years later. But I also bought a practice, and the way I did that one was I looked at his turnover, and I didn't realize how the guys would adopt to me. So I give them, they were happy to take it, 10% of fees that I got in the first 2 years. They were happy that way. But I say, if client, lots of people talk about turnover, lots of people talk about profit. Obviously, if there's assets involved, they need an independent valuation. The goodwill thing, it's are the guys going back? Is the business related, say, to me? If I'm the guy, I don't think the goodwill is that much. So that's why you help people to have loads of systems in place so that the business, the business is saleable, but at the same time, it's not dependent on one person. Where I'm going to say Trevor is the issue. So if you can sell a system and a package, it'll be a really good business. But if this guy thinks this was all down to the skills of the person, you're not going to get much money for it. But it's profit is a big thing, obviously.
So would our panel agree that a business is worth what somebody's willing to pay for it, and that there are a number of ways of giving you a guide to whether you're going to get ripped off or not? Would you kind of agree with that, Janet?
Yeah, I mean, at the end of the day, for me, there's three things there. There's the capability of future profits to come out of it. There's obviously the asset value that you're taking on, and then there's a goodwill. I mean, goodwill's a big thing because, if I, for example, I'm selling my business, it's only me, and the goodwill really is down to me. If I'm not in that business, it may not be the same business going forward. So, you have to look at a number of different aspects, but, it really comes down to a negotiation situation around what somebody's willing to pay. And yes, there's different things that you can check to make sure that you're not under overpaying based on what you're getting. But again, it comes back to your balance sheet. What's the equity there? What's the reserves there? What's the capability of profits going forward? If you're buying retained customers, you should be able to forecast forward and say, well, actually that should generate me X amount of revenue in the next couple of years and Y amount of profit.
So would you guys tend to get, I'm just picking up on Neil Colwell's question here, number 2, do you guys tend to get involved in helping your clients sell their businesses and getting their books in order, Martin Gilchrist?
When you've been about for long enough, yes, this will come up from time to time.
Yeah.
There's two ways of looking at it. It depends on the business. The valuation and the sale of the business is all context related. It's almost like an auction. It depends who's there on the day. It depends on timing. When are you selling your business and who's buying businesses? And yes, there are provisions in place that you can give a provisional value. And one of the main ways of doing that is just comparing it to how similar businesses in a similar environment have sold in and around that time. Mm-hmm. But yes, we have been involved in it. We're not specialists in it. There are specialist organizations that are set up specifically for the purposes of buying and selling businesses, valuing them, and either helping you get the best purchase or sales price. Also, the big corporate legal practices would be very interested in anybody that's selling the business because there's big fees involved in all of that. But what we do is the core face-to-face, day-to-day balance sheet, profit and loss, make sure everything's as it should be, so that when people are making a decision, they're making a decision based on accurate information. And what's very important here is the credibility of that information. So Michelle's an FCA, so she's a senior member of the Institute of Chartered Accountants. And there's more than 60 years experience in the practice between the two of us. Mm-hmm. That's an awful lot of experience of dealing with people in those situations. And it counts, because when you're talking to third parties that don't know you from Adam, they want to know that the person you're working with, that your team's credible. Yeah. And that helps a big lot towards purchases and sales of businesses.
Yeah, I think there's sort of, for me, it comes back to who's buying. So yes, 3 times turnover or 7 times margin, or depend again on some software businesses I've seen them value between 14 and 25 times the margin that they're making. Again, also, what market are they in, where it's moving to, what's the plan, what the business plan is saying, will all add something of value to it. But also the other thing that you might throw into the mix is how they're going to pay. Are they going to pay with cash if it's a corporate buyer, or are they going to talk about some form of cash and equity deal, equity in the new business might all be thrown in there. So yeah, I think, Trevor, from my point of view, and the sort of feeling around here is who's going to buy it, and also yes, 3 times margin or 3 times turnover, whatever, is a good sort of rough guide, but it comes down to the deal that can be done on the day. yeah, and I would also actually say, having done it twice as well, being ready for due diligence, because there is nothing worse where you value a business and then you get into due diligence and some clever, don't take this the wrong way, accountant comes in and goes, aha, but there's this VAT that wasn't paid in 2005. Mm-hmm. Have you sorted that one out? Yeah, we just knocked 20% off because of that. And that happened to me where they tried it on. So I don't think so. But no, it just held the whole process up for 4 or 5 weeks because some minor VAT inconsistency, literally from 6 years beforehand, even though we've been through two VAT inspections in between. And it had never been picked up, but it was just being used as an excuse to batter us over the head. Right, we've got the last 3 minutes now. So I am going to finish off with a question that we had earlier on the week in our networking on Tuesday, which happens every Tuesday morning at 9:30. Please do come along. It's open to all. What resolution do each of you have for the next financial year? And I'll start with Martin Gilchrist, if I could, please.
Well, it's the same resolutions I have every year: lose weight, be better looking. I don't know. I'll not go down that list, but the financial resolutions.
So the ones that don't require surgery, Martin, are the one I
I think a good financial resolution is to have a business spring clean of the overheads that you are incurring in things like mortgages, insurances, loans, telephone costs, and all that type of stuff. And that takes time. I appreciate it. How long do you have to hold on the phone to try and just renew your motor insurance policies? It is time consuming and it's a bit of a pain, but it's really well worth doing. And particularly now, I think there's people on the wall here that know a lot more about mortgages and life insurance policies and all the type of stuff that we should all be thinking about as business owners, but they need to be reviewed and refreshed on a regular basis at least once a year. So if you're asking me what my spring clean is for this year, it's going through all those things that are coming out of my business account on a direct debit or a standing order to pay for insurance, mortgages, loans, indemnity insurance, and all the rest.
Just making me feel guilty now. Martin Malseed.
Yeah, probably when it comes to helping clients, I'll be talking to them would be about, have they got a will? And have they just got a simple mirror will where they leave everything to their spouse? People in partnerships, I'm going to be talking to them, what happens, would they have a partnership or a company will? And I'll be looking to see them about sort of enduring power of attorney, lasting power of attorney if they're out cycling one weekend and they have a proper business. Like a guy died at Christmas and his poor widow put a thing, he ran a business, put a thing up on Facebook. The place is shut for a few days and we're assessing things. Like that could be a business with a whole lot of goodwill as we talk about it, but having a bloody clue. Yeah. So I'd be talking to all my business owners. Have you got somebody to step into your shoes to manage it until such times as your estate or whatever can deal with it? Because otherwise, self-employed people are so vulnerable, particularly one-person bands. So that'll be sort of talking about sort of asset protection side of business, dead or alive.
Okay. And Janet?
For me personally, it's probably going to be working smarter rather than harder, because at the minute I'm trying to grow my business. So it is about being smarter with my time, I suppose. But in terms of my clients, I would be suggesting to them, and I think Martin Gilchrist had mentioned this earlier, about trying to do their self-assessments early, so that they have a reasonable period of time to save up for the tax bill when it comes due again in January 22. And the other side of it would be to make sure you get your routines of, getting your accounts up to date every week or every month, depending on how frequently you want to look at them, because people do tend to leave it and put it off or procrastinate around it. So I'm there to sort of help handhold them through that process and get familiar with setting a time in your diary every week or every month to do that.
And well, I suppose if you do that, then also producing your tax return very early is not that difficult, because you're on top of the accounts, and it gives you 9-10 months in preparation for, I've got this huge tax bill coming in.
Yeah.
At which point then it is a nice problem to have. So, right. Ladies and gentlemen, it is 4 minutes to 2. I would like to thank you all. First, everybody for coming along and joining us today. Thank you, Janet Jensen from Extra Accountant, Martin Malseed, and Martin Gilchrist for your time and inspiration and good words and all that sort of stuff. So we'll give everybody a little virtual round of applause. That's great. Thank you very much for coming. Don't forget that we have our next Bismarang networking open to all on Tuesday at 9:30 a.m. Watch out for the posts about that in the app, in Bismarang Facebook group, in Northern Ireland Business Facebook group, on all the other LinkedIn social media and all that sort of stuff. Other than that, thank you very much, everybody. Thank you very much to our panel, as I said, and I'll see you all.
Thank you very much. Have a good day.
Bye.
Thanks very much, guys. Bye-bye.
Are you holding back a minute, Guy, or?